So let's go to New York and speak with Maria. Maria, thanks for calling. Thanks for holding. How are you today?
I'm good. How are you, Steve?
I'm very well. Nice to hear your voice, and thanks for calling. And how can I help?
I'm sorry, I missed. I was not able to call you when you were covering the ES Mini, so I'm sorry to make you repeat something.
That's okay.
If you covered it, but on your letter, your first chart was describing the ES Mini. What is it, 30 minutes?
240-minute chart.
40 minutes. And you were saying something that I couldn't understand, because by 7:30 in the morning, we had already, the ES Mini was up like 35 points or 30 points already. And you said at 7 a.m., we don't have a bullish reversal candle that we need to, so we can't take a bullish sight on it, or bullish bet on it. And I couldn't understand why, because by then we were above your red line. We had like a succession of 3 or 4 240-minute candle green. So I just want to, understand what makes you wait a bit for pulling the trigger.
Sure. So here's my experience, and what I'm going to do is I'm going to get a little bit of a cleaner chart versus the one that I have on my screen right now. So just bear with me. But as I'm doing that, as I'm multitasking here, when I developed this pattern, when I began searching for the reason why certain patterns failed, not why they succeeded, but why certain patterns failed, what it led me to, so for example, and that was with the A to B equals CD pattern. And when I was trying to buy or sell the one-to-one extension there, and it worked sometimes and it didn't work other times, I wanted to understand why. Why was it not working? What was I overlooking? And what I found was, and then when I developed this price relative strength divergent pattern out here, what I found is that the key that gave you a higher degree of probability that the trade or that the signal was correct was a bullish or bearish reversal candle. So right now what I'm going to do is I'm going to go ahead and pull that 240-minute chart up on the screen, even though we've got it here right now, just a little bit of a cleaner signal. And what I want to do is I want to go back to past patterns that are out here, which I had some arrows pointed for you this morning. And if we take a look at, and these gave great signals. So I'm going to first start with back here at about 10 o'clock in the morning, and this takes us back to March the 2nd. March 2nd, a key level, when also on March 2nd, everybody believed that the markets were going to careen lower. And it just so happens on a 4-hour chart, price was moving lower, doing less relative energy, and that very next candle session at 2 o'clock in the afternoon was that bullish reversal signal. That was a signal to you and I that the cavalry was really there, that bullish reversal signal, just like up at the most recent high out here, and this is at 10 o'clock in the morning, and this is on March the 13th, price was moving higher, doing less relative energy, and on the 240-minute or 4-hour time frame chart, you receive that bearish engulfing candle. And it's really key to get that reversal signal. So then price starts moving lower. It starts doing it with less relative energy. And when you see these black diagonal lines that form on the charts inside the newsletter, such as the one that was at 6 o'clock in the morning, and this was on March 22nd, that alone was not a signal to go long. Can you wait through this break, and we'll come back, we'll complete this, and I'll answer every single question that you have.
Thank you very much.
This is Steve Rhodes with TFNN. Maria and I will be back after this short break. Thanks for coming back, folks. So we're on the line with Maria in New York, and she's asking a very specific question about the first chart that was inside my newsletter. Now, the reason she's asking about that is last Friday, as the markets were moving lower, inside the newsletter, I had identified this 240-minute chart for the ES Mini, and what I said was we were going to go ahead and remain short with regard to our market posture until this next price relative strength divergent formed, if it did, which it did begin forming again last night as the market opened, right at about 10 p.m. was when we see this black diagonal line moving lower. Now, the mere fact that price either moves higher or lower with less relative energy, Maria, that alone is not a signal to go ahead and take the counter trend move of the direction that it's moving in. You really want to wait till you get some type of bullish reversal signal. For example, there was a move at 2 o'clock in the afternoon on Friday where the ES mini had bounced from a low of about 26.64 up to about 26.96, which was a nice move, a 30-point move out there. But it simply failed. And that price move, well, as you pointed in this case here, was below Stevie's red line, but not a bullish reversal signal, and therefore no reason to take that trade. In this morning's newsletter, at 7 o'clock, we did have price trading above Stevie's red line out there, as it's shown out here in the chart. But what we were also doing is you've got this wide-ranging bar, that went all the way into the close of the contract out here. And whenever you're just trading with inside this wide-ranging bar, and there is no bullish reversal candle out here. So technically, with regard to the 240-minute time frame, we do not have the signal that I was requiring on Friday. Do we have a bounce?
Okay, so,
absolutely.
Okay, no, I understand. I think I understand what you meant. So basically, what it meant that basically, if this morning at 7 o'clock in the morning or 7:30, you have seen a green candle going all the way back to 26.45, that would have said to you, okay, I have the proof that it's a bullish reversal because my candle is bigger and going above the previous high, or whatever, 26.46, right? Is it right? Is it like that you said that you have a proof of a bullish reversal? Is because the candle you're studying is bigger or higher than the previous day's high?
Not exactly. Not exactly. No. And what that would not have generated for you and I would have been a actual bullish reversal candle. A bullish reversal candle would be like a bullish engulfing, a bull sash, a hammer candle, a Three-River Evening Star, and it would not have given us that. So instead, what I did this morning, I was looking, okay, what's going on at 6 o'clock? What's going on at 7 o'clock? What's going on at 7:30? And by 7:30, what I also noticed was two things out here. And what occurred was on the daily chart, what we looked at was that it was also moving lower with less relative energy, and it had begun to generate a bullish reversal signal. Right now, it's a piercing candle. That's what it was this morning out here. And if that does provide you and I with a bullish reversal signal, then that says, aha, we may have the bullish reversal signal to indicate to us that using this trading strategy, a bottom is in. Our preference.
Okay, so you had to look at every single candle and just see if it performed one of those bullish patterns, right? Otherwise, you will say, even if I have a green candle, even if I have less intensity on the drop, so less sellers, even if I'm above my red line on a specific time frame, that will not be enough for me. I need to have all those things lined up like little ducks, right?
Yeah, that is correct. For this specific pattern. For two patterns, I'll give you two patterns. One is price moving higher or lower, less relative energy. The second pattern would be the A to B equals CD pattern. And that is present right now inside the ES Mini on a 240-minute chart. I'll draw that in, and we can see that the 1 to 1.272 objective was hit late last night. But it, too, needs an actual bullish reversal candle to confirm, to say, okay, you now have the signal on this time frame to buy the D point, so to speak. We don't have that. So this morning, what I needed to do for us was to qualify it and say, okay, here's the conditions at which at 12 or 12:30 when I send out an update, if this is taking place, we will go ahead and begin a long position in the market. That didn't occur. And that was also taking a look to see where was price trading in relationship to 26.38, 26.39, the bottom of those profiles for the 120-minute and 240-minute. We knew that those were likely resistance levels, and they've actually worked out to be resistance levels, which was why I was able to ask Z, or answer Z inside the den and say, you know what? If price closes over 26.39, even if I don't have the bullish reversal signal on the 240-minute chart, we now have enough information to suggest there's more counter trend rally in place out here. But Maria, what will override the 240-minute chart becomes the daily time frame. Any larger time frame that gives us a same kind of pattern, but gives us the bullish reversal signal is going to give us more weight, more meaning. Is that kind of making sense?
Perfect. I'm learning so much. Thank you so much, Steve, because I've been trying to learn because as you say, you've been providing us at TFNN with so much information in terms of your experience and everything, and you've been working for this since 2006. You were saying,
yes.
So I'm trying to absorb what you've been learning and testing and everything. So thank you very much for spending your time. And I'm sorry for the other callers who probably want to have more questions, but I'm glad
actually,
that
no.
something.
Actually, you know what occurs, Maria, is you actually end up asking the questions that others would like to ask. So the other callers are just listening in because they would have the same type of questions, that you have.
I don't know.
They do.
But thank you very much.
So, yeah, my pleasure. Thanks so much for calling. So that was Maria in New York, and she was really asking questions on behalf of everybody out there. And that's really, come on, that's really for each of us out here. That's what it's all about. It's a matter of you've got 45 people.